Snell Cooke, your host here at the Credit Connection. So I've got a question for you. When a business comes to you and they want to borrow against their fleet of trucks or maybe their private jet, need one for the Credit Connection, how confident are you that the collateral is actually worth what they say it is? Because here's the news. Traditional valuation methods can take weeks or months and still get it wrong. So I talked today with Thomas Galbraith, the founder of Barker. And we dive deep into asset-backed lending for credit unions. So we're talking why private credit is filling the gap left by traditional banks and how credit unions can leverage their trust advantage to compete. And why this might be the perfect time for your credit union to get serious about business lending. Plus, we'll break down how AI-driven pricing machines can improve your loan-to-value ratios, unlock more capital for borrowers without increasing your risk. So if you've been watching business in your community struggle to access capital, if you're ready to look for ways to serve those members, let's get into it. Hello and welcome everyone to the Credit Connection. I am Sarah Snell Cooke, of course, your host here. I am joined today by Thomas Galbraith. Welcome.
Hello, thank you for having me.
Thank you for being here. He is the co-founder of a company called Barker. Why don't you give us a little introduction to yourself as well as the company?
Yeah, sure, thank you. I have been in the luxury and tech arena for about 20 years. Having previously lived in New York for about 15 years, I moved down to Miami about 5 years ago. And Barker, we started about 3 years ago to solve a very specific problem within lending. We value loan collateral with our proprietary AI, and then we underwrite the accuracy of that valuation. And in the event there's a default and the assets, the collateral sell for less than we said they were worth, then we pay a claim in partnership with our insurers, Munich Re and others.
Mm-hmm.
And that's really it. It seems very simple, but it's a very, very big problem that has existed for a long time. And we were able to come along and solve it.
Yeah, so if you could talk a little bit about the business lending environment in the US right now. How's that going?
Yeah, it's I don't say this to be self-serving, but it's actually really interesting. And it's interesting for a few reasons. The biggest really is this broader shift that's taking place. There's a shift from banks doing lending to businesses for eons and eons, and then as regulatory requirements have changed, and whether it's Basel III or other regulatory concerns coming in, we've really seen this shift where the banks are actually pulling back from lending to businesses as much as they used to. And that gap has created an opportunity for private credit to come in. So private credit has actually started to fill that gap and other sources of credit. And it's been really a very active space, I would say, over the past sort of 5 years, and it continues to accelerate. So there's still a strong opportunity for banks. There's still a big opportunity for credit unions, but there's definitely a lot of money moving into the sector. And when you couple that with some of the other things happening in terms of the elevated interest rates, tighter capital requirements more broadly, and generally lenders are being a little bit more sort of the scrutinizing risk a little bit more. So it creates a very interesting environment where you see increased competition, but that increased competition is also coming from a newcomer that doesn't necessarily have the same infrastructure that a bank or a credit union would have.
Hmm.
So sometimes that can put them at a bit of a disadvantage. But conversely, there's a lot more competition in the space.
Hmm. For sure. I mean, we've definitely seen a growth in credit unions, even merging banks into them so that they can buy that expertise. And so, what are some of the challenges that credit unions that offer business lending today face, both obviously in the market environment, but also operationally?
Yeah, so obviously a higher cost of funds, right? I think that's
Mhm.
probably one of the biggest ones. And as I mentioned before, increased competition. But there's because of that competition, you also end up with borrowers being quite sensitive. If you're looking to get a loan, or if you're trying to unlock some capital, you're probably going to be very price conscious, right? You're running a business, you're trying to run it efficiently, you're trying to make sure that your capital is as cost effective as possible. So those are some of the biggest challenges I think facing lending broadly, and then specifically within credit unions, there is that risk as well, or that consideration. And then the biggest one across the board really is just collateral risk, and that's kind of why we exist, right? Like Barker was set up to address that collateral risk, and we see that across whether it's a credit union, a bank, or private credit.
Yeah, yeah. And so explain asset-backed lending, if you will.
Yeah, absolutely. So asset-backed lending, it is uh, simultaneously simple and also starts to get quite complex. At its core, right, from sort of a base level, if you will, we'll just use a very like easy example, right? So if there's a business that has decided to spend, we'll use like made up numbers, $20 million, and they've bought equipment. That equipment could be anything from uh, farm equipment, it could be industrial equipment, it could even be a private jet if it's needed, if the business is profitable enough to borrow a private
I
jet.
need one of those for the crane
Yeah,
connection.
exactly,
Yes.
exactly. If it could be any kind of piece of equipment or asset like that. So 20 million out of a company put into those asset or that asset is a lot of money. Like for any business, that's a lot of money. And so basically, as a business, you don't want to leave that cash in that asset. You want to get that cash back out so that you can use it for operating costs, for other costs that may arise for different reasons, right? Like locking it up is not ideal. So that's where a lender can come along and say, you know what, I will treat those assets, the trucks, the industrial equipment, the jet, whatever it might be, as collateral, and I will lend against that collateral for a fee. So it's very similar to other types of lending. I'm sure everyone's familiar with mortgages or anything like that. It's a similar concept, or auto loans. Um, it's just on a much bigger scale, and it's for a business. I think that's sort of how I would strip it back to its core kind of concept. It shows up in other areas. Some people like receivables, for example, fall into asset-backed lending, and you can borrow against your receivables. I don't know why receivables fall into asset-backed lending, but it does.
Oh, that's awesome. It's good to know. And so, as investors are pulling back, I guess borrowing is the next most effective option for businesses. Yet, as you mentioned, the rates are higher, general costs of running a business are higher, with inflation. And so, how can credit unions that have been known for their member service and rates for years turn this into their advantage?
So I think one of the things obviously credit unions are known for, right, is this sense of trust
Mhm.
and relationship and the focus on the members and all of those things. But trust really is a big one. And I think where they can really win is by kind of leaning into that trust. And I'm not trying to be kind of uh, self-serving or facetious. Like trust is important in lending. Like you are developing a relationship between the borrower and the lender, and a big part of that is trust. The lender needs to feel confident that the borrower is going to do what they said they were going to do. They're going to pay their interest on time, like the collateral is what they say it is, like all of those things. And we're actually addressing one of those components of trust, which is the valuation, right? Like, so
Mhm.
often, what will happen is a borrower will come to a lender with with a valuation, and they'll say, "Hey, look, this is what the asset is worth." And the lender, it can be hard for a lender to really know if that's true or not. Often, a valuation firm will be engaged by a borrower, not the lender. And even when it is engaged by the lender, the margins of error for most valuation firms are pretty significant.
Mm,
So it's really difficult to trust that price. So you don't. It makes lending against assets sometimes difficult. So that's really the biggest thing that we tried to solve for, which is why I think partnering with credit unions for us at least makes a lot of sense because we're also bringing trust to the table and backing up that trust with our insurance providers as well.
mm,
So I think that's I would say yeah I think the opportunity there for credit unions is to really lean into the sense of trust and the relationships that they've developed with their members.
mm.
They are at an advantage to what another lender might come in and start at, right? Like they're effectively starting from zero and they have to gain the trust of the borrower. Credit unions already have that trust.
Yeah, yeah. Yeah, yeah. I mean, there's so many things to trust the credit union to do. You trust them to have the technology up and running in the middle of the night when you have to buy something last minute, or, you know, trusting them to have the capital to lend you, right?
Yeah, yeah,
Um,
this is true. This is true.
yeah, so I can definitely see where trust plays in that, especially when you're kind of predicting or assessing what a piece of farm equipment might be worth that they're going to borrow against. Do you expect credit unions to ride this momentum, especially now when you're talking about essentially what I seems to me to be essentially guaranteed loans? But talk a little bit about that. Do you expect there more to be more growth about beyond the banks?
Um, I, I do. I mean, if you look at asset-backed lending as a sector, depending on who you ask or believe, it's about $1 trillion to $2 trillion, and it continues to grow approximately 11 to 12% CAGR. So it's growing aggressively. A lot of that is private credit coming in, but there's still a decent amount which is allocated to banks and credit unions. And then you look at, okay, well, why is asset-backed lending growing, and where is it growing? And I think the answers to those two questions are really that um, businesses continue to need more capital to grow, to meet necessary targets for operational reasons, and I think there's a real opportunity for again coming back to the trust component for an existing relationship to serve that need.
Mm,
And if you can serve it while being competitive and being risk conscious, right? So being risk conscious means that the credit union is well protected, but then also potentially the borrower also is well protected.
mhm.
So I think that there is a tremendous opportunity for credit unions to grow far more than where they're currently at in that sector. Yes.
And so you mentioned also that when you were introducing the company, that you're use AI to do these evaluations. So
Yes.
how can AI-driven pricing engines improve credit unions' business loan collateral? And what are the benefits to the credit union and to the borrower?
Yeah, so we do use AI, and it's not sort of an off-the-shelf plugin. We actually built our own large language model, and we trained it on valuation data and content, and it now understands how to value multiple different types of assets.
Hmm.
And I think in terms of outside of applications of AI for credit unions in other areas and how they can make their business more efficient, for this specific use case, right? Like for using it on loan collateral, what we found is that our clients are able to implement a product like ours and then recognize that our pricing accuracy, our AI's ability to price accurately is so high and underwritten by insurance that it enables our clients to improve their risk rating when they're doing a loan. Or they can reduce their cost of capital. They can recognize the risk transfer. which also unlocks potentially additional loan to value, as well as other benefits that the borrower may appreciate. So sometimes with asset-backed lending, what you'll see is a loan to value of 50 to 60%. And largely that's because the lender doesn't know what the asset's worth. So they're
Mm.
like, hey, look, this can go horribly wrong. And if it goes horribly wrong, then I'm going to guess that like the assets, the collateral will sell for 50 cents on the dollar for what you said they were worth. Whereas we come in and we say, actually, we're an independent valuation firm and our AI is very accurate. And also, if we're wrong, we will make up the difference. And
Mm.
that makes the lender far more comfortable, and they can increase their loan to value, potentially unlocking more cash for the borrower, which obviously the borrower is very happy about because they're using that cash and putting it back into their business for operating needs. So I think that's really the biggest area where we've seen our clients and also credit unions benefit is you can unlock uh, a better profit margin, if you will, for your book, and you can also satisfy clients' need for more capital.
And do it faster, it seems like, too.
We
That would be a
also,
lot
this is
faster.
true. This is true. We also have a very, very quick turnaround time,
Yeah.
within like 48 hours, depending upon like the assets. If someone sends us 20,000 widgets, then it might take a bit longer, but typically it's 48 hours. And most valuation firms, you're looking at weeks, if not months.
Yeah. And that doesn't help either the borrower or the credit union.
No,
Got
no,
to get that money
exactly.
out the door, start
Yes,
earning on
exactly. Exactly.
it. Alrighty, well, this has been really interesting. I think it's a topic that we don't address enough. We were talking earlier about how, you know, I'm not sure how many credit unions are involved in this kind of borrow or lending, excuse me, but you know, it seems like it makes sense, especially now as things are tightening. Um, but anyway, I always allow my guests to have the final thoughts. What would you like to leave our credit union leader audience with today?
I think if there's one thing that I would say, the one takeaway here is that there is a tremendous opportunity within asset-backed lending to serve a community that often credit unions already have access to. And you can serve them with a de-risked product. And I think that's a win-win for everybody because a lot of businesses do need more capital to operate. A lot of credit unions would like to do more lending, but they
Mm.
need to do it in a way that is as a good steward, right? You want to do the
Right.
right loan for the right person with the right risk. And a company like ours can help make that happen. But even without that, it is a very interesting space and it's moving and growing very, very quickly. And I would more into it. And from what we see, for good reason, there's good yield, good clients, and the right loans very well.
As always, they always make sense. Thank you so much for joining us today, Thomas. Appreciate it.
Thank you.